All right. So now let's get started with ID50H1. Identity trade 50H1. So now let us look at how we can pick our trade on H1. On H1, we look for how we can identify our setup on H1 and how we can enter the market on M15. Now, this kind of trade, we have to uh, do it in a break, because we can't just go ahead and say you want to pick your trade on H1 without you actually understanding the market trend on H4. So now in this kind of trade, we'll be considering three different time frames, in the sense that we'll be considering H4, and we'll be considering H1, which is where we are going to see our trade setup, and we will now go to where M15 to pick our trade entry, right? Now it is as simple as this, right? There's nothing big there. All you need to do is to go to H4 and confirm what the directional bias. You don't need to do anything much. Just go to H4, understand where are you in the market on H4. So I'm not going to actually share any chart on H4, because you are just going to go there. You know how to count your levels. You've been taught that. Go to H4, check your directional bias. That means, where is the market going to on H4? Is it going down or is it going up? You have to first confirm that on H4. Now you come to H1. This is where we'll be talking about today. And then from H1, we go to M15. So now I'm going to remove H4 from our equation, since we've said H4 is only used for our directional bias. Now let us draw our cycle, and let us look at what we'll be looking at. Let's assume this is our cycle on H1. Now, ideally, not every time these pullbacks are our ID50 trades. Not every time, but ideally, they are our ID50 trade. This is 50 MI right here, ID50 trade. Now, 50 MI. Now, what are we looking at? Now, market was initially, let me use red now, red. Market was initially pulling down. Market was pulling down, right? At a particular point in time, market will take a break. Now, around this point, market will start to show you rejection patterns. Now, when market starts to show you rejection pattern, we both know that market has fallen down, right? It has done its level one drop. Now, after a level one drop, market will pull back. It will start retracing. Now, when market starts to retrace, all you need to do is to be waiting for it on the 50 MA, because in most cases, market will pull back to 50 MA before it was start its level two drop. Now, this pull back to the 50 MA here is what we call an ID50 trade. ID50 trade. Now, all you need to do is to wait patiently for market to what? To pull back to 50 MA before it continues its movement downward. Now, when market pulls back to 50 MA and you pick your trade here, it shows that you can what? Pick as much pips as you like along this trend. Now, it is ideal for me to say that in a particular level consolidation or pullback, it is possible to have more than one ID50s, or you don't have ID50s at all on a particular level pullback. It is possible for you to have more than one ID50 setup trades, or you don't have any ID50 at all, right? So now this is our first contact point with 50 MA. Market drops again, and after market drop a level two drop, market will do what? Will show you some rejection pattern around here, and market will pull back again and what? Ideally reject at ID50 on 50 MA before it pulls back down. Now the question is, what is M15 doing? Now this is our H1 trade. Now we know our trade setup is on a rejection on what ID50, but our entry pattern must always be on 15 minutes. Entry pattern will always be on 15 minutes. Now, the first thing you have to consider is what is when we have 50 EMA on H1. What does it mean on M15? It means what? 200 EMA on F15. 200 EMA on M15. That means your trade entry, which is our M or W, must be on 200 EMA on M15. Now, what am I going to be seeing on M15? Now, on 200 EMA on M15, 200 EMA, because of our white background, will be black. So let me go ahead. It will just be something like you are seeing on H4. So what are we going to be seeing on M15? Let me change the color to use on M15. We'll be seeing something like this particular point on H1 will be showing you M on M15, something like this on M15, which is what your setup. Now this particular point also will be showing you something like what M on your M15 on 200 EMA, right? It will be showing you M on M15 on 200 EMA. This is exactly how we pick our trade on H1 ID50. It is actually as simple as it seems. It's actually as simple as it looks. We are actually going to go to our charts to confirm more of what I said, but look at it very well. I repeat, so I will take it over again. We wait for our market to ideally pull back to where 50 EMA. And when we wait for our market to pull back to 50 EMA, all what we are doing is to do what? All what we need to do is to do what? Is to go to M15 and check what the market has done on M15. Now, when market is rejecting on H1 ID50, on H150 EMA, it will definitely at the same time be on 200 M15 EMA. It will be on 200 EMA on M15. And when it's on 200 EMA on M15, that rejection you are seeing on ID50 H1, it will be giving you M. Rejection on H1 can be just series of candles, rejection, pin bar, and the likes like that. But on M15, you'll be seeing a M-like structure to trade rates. All right, let's go to now. I hope you understand my point. Now let's go to what was it called? Let's go to our charts and let's see some things. I'll both be using my phone chart and my system chart to explain some things. Now let us see what we are having. Okay. Now, okay, good. Let me look at all these ID50 trades along this 1 hour trend. Now, look at this trend. Look at how market moved. Let me show you. Now, look at how market moved from a peak low here and moved to a peak high here. Look at our movement. Can you see how market moved? Now, that's definitely not a problem. Our question is, on every rejection on M15, on every pullback on M15, we have a possible trade on what? On every pullback to the 50 on H1, we have a possible trade on M15. So let us see. This is a pullback to H1. Look at it. Market moved up. Then what? Rejected and pull back where H1. Look at it. Now, this is what we do. Let us mark that box out. Let us mark this out. Can you see? We'll go check it out on M15. Now, what did market do again? Market started moving up again and came back where ID50. Can you see? Now we go again, we go and mark that out so that we can check it out on M15 and we see that our possible trade setup will be what? will be there. Can you see the only trade you pick on this kind of trend, since you know it is a buy market, since you know you have a peak formation low here, you are only picking a buy to set up all along till you get your peak high on the next what, on the next market. Now market put or market was moving up. What did market do again? Pull back to 50 EMA. All this is still what in a particular what level, and you keep picking it more and more like that. Let's see. We'll go check what possible structure we are likely going to have on M15. Now we've marked 3 along a particular trend. We've marked over 3 at 50. Let's keep checking it till we are done with all kind of I-50. Now, see again, market pull up from our last I-50 and pull back where here to give another word I-50. Now look at it. Let's check. Let's keep marking our charts. So we have 2 I-50s in 2 days around this region. The market did what again? Market put up. Market kept moving up. Then pull back where I-50. Rejected on I-50. So let's insert our box again so we can see on M15 how we are getting it. This thing is actually simple and there's nothing, absolutely nothing difficult in it. Now let's continue. We didn't have any I-50 again until we get to a peak high here. So we are cool not having any I-50 again. Now let us go check what we have on our what, on our M15. Now we've marked all possible I-50 on what, on H1, 1 on this particular trend, 2, 3, 4, 5 possible I-50s on H1. Now let's see what we are likely going to have on M15. I'm coming. Let me clear all my markings and we'll check what we likely have on M15. Okay, let me go from the peak low. I think this is the peak low. Yeah, this is the peak low. Now look at it. Our first one is this. Can you see? And our entry is right here. First one, I-50 trade. Look at our W here. Our W, first leg, second leg. Our entry is right here. Can you see? I-50. Can you see where is it happening? On 200 EMA M15. Very important. It is happening on 200 EMA M15. Look at this. This is the first one we marked. Our W is here. Then you pick your entry and you take about 20 pips. Let's see how many pips you will have taken if you enter. Minimum of 20 pips. You can take minimum of 20 pips. Oh, wow. This is 50 pips already. So you get the logic I'm trying to print. I'm trying to say. Now look at it. Let's go to the second marking. Let's go to the second marking. Look at it right here. As easy as it looks. You pick your pips, you pick a whole lot of pips. Can you see our second one? Can you see your W? Where is your W happening? On 200 EMA. Can you see? But on each one, it is happening on where? On 50 EMA. That's the reason why we call it ID50 on H1. That's the kind of trade you are picking. But on M15, you come and pick your what? Your entry setup, which is your W pattern on M15. Now, can you see? You enter your market. Let's see how many pips you will have taken. You will take minimum of ID50 trades are intraday trades. So you are picking minimum of 20 pips. Can you see? You will have picked about 40 pips up. So let's keep checking. Let's keep checking. Now, that's the second marking. Wow, look at the third one again. Can you see? I actually never checked my M15 when I was marking because I wanted you guys to see. I wanted you to see what exactly I am trying to print out. Like, look at something. Our third ID50, but where did it happen? On 200 EMA. What is 200 EMA on H1? 50 EMA. Can you see? Just on 200 EMA. And how many people would have picked on this third ID50 along this trend? When you enter your market here, you would have picked about, let me see, over 100 pips, over 100 pips. Amazing, amazing, amazing. Then market kept going up. Can you see? The next time market happened, market showed you another ID50. But this one is actually not the best W. So probably you wouldn't have picked this because it didn't match all the conditions of our entry. But market came back here in the middle of the night and gave you a good W. And you could have entered around here and picked over 100 pips. In fact, this one should be up almost 200 pips all through the day. Isn't this amazing? I think that okay, yeah, we have one more. Can you see another 850 on where? On 200 MA. Can you see the structure? Our market put up over 200 pips, over 200 pips. Now, this is exactly what I'm trying to tell you. It is as simple as you looking into your charts and seeing the structure. For a down market, let's say for a down market, all these possible points, market, after you've confirmed your peak high, every possible point market is rejecting back to the 50 is your entry on 15 minutes on 200 MA. It is just as simple as that. Every possible point, why you count your levels and why it follows the market cycle, that your market is pulling back to the 50 MA is your possible entry point on 15 minutes. 200 MA on 15 minutes. It will give you your W on 15 minutes, just like we've seen it in all the ones I've marked. Now let us look for a downtrend market and let us use a downtrend market also. Let's use a downtrend market also. So let me go and look for a downtrend market. Okay, I think I can see a cycle here. Check. Okay, good. Let me zoom this out. This is a down market. And then we'll look at, well, this is a complete cycle. Use exactly what I'm trying to explain. Now, this is a complete cycle. Let us mark the cycle out so you can see it's a complete cycle. Peak formation high, right? Level 1, right? Level 2, right? Peak formation low. Remember when I said in a particular trend, there is probability we have in a particular consolidation, this level consolidation, there's probability we don't have an ID50 trade, right? We don't have an ID50 trade and it happened here. I said it, or we have one or more ID50 trade, like it happened in the other cycle we just consider. Look at this particular level, no ID50, market drop, consolidated, but didn't move back to the 50 MA. Didn't touch this place before it started dropping, right? And which is not our problem. If you are not picking a peak trade, you are not going to enter that kind of trade. But look at this second level, market moved back and came where to an ID50. On second level, market came back and rejected where around ID50 before it started dropping. So let us mark that out and let's go check what we have in the market. So you have to be disciplined to pick absolutely the right trade for you. Because if you are not disciplined, you will just be picking any kind of trade, and any kind of trade doesn't work in Forex. That's just a simple truth. Any kind of trade does not work in Forex. Look at it here. I-50 trade. This is exactly the one we marked, the only one we saw. Very close to where your 200 MA. A market wall, market back down. Can you see? Can you see? Now let's look for other peers. So it won't be like, okay, this young man is looking to just one particular peer and he does not actually know what he's saying. Of course, I do know what I'm saying. So let us look for other markets. And we look at our H1 and then we zoom out a little. Let me zoom out a little. Now, look at this particular trend. Let me show you this particular trend. Look at this is a peak reset right here. This is a peak reset right here on 200 MA-H1. Now look at it. Market kept falling. Not possible ID50 yet. It's rejected. Where did it reject on? ID50. Came back down. Came where? ID50. Came back down. Went back where? ID50. Can you see? Rejected here again. Came down till it got to a peak, a peak low. Now let me tell you something about intraday ID50. It is good when you set your It is like we call it intraday. That means a trade within a day. It is good when you said it is easier for you when you look at just a possible take profit of 20 pips or thereabout. But there are ways to take more than 20 pips, which I'm also going to explain very soon here. But it is just ideal for you to watch to take 20 pips. All right. So this is exactly what you do. You just wait for after you've confirmed your peak formation high, if it's a downward market, or a peak formation low, if it's upward market on 1 hour, all you need to do is to wait for the market to go back to 50 EMA. When it is touching 50 EMA on H1, go to your M15 and wait for your M structure there or W structure there. It is as simple as that. And you pick your trade, but it must follow the direction of your trend. Very important. Your M and W must follow the direction of your what of your cycle. Now look at this particular cycle here from here to a peak low here. Look at market rejecting I50, market rejecting I50, and market came here I50. Can you see on this particular cycle? ID50 is always going to happen. ID50 trade on H1 is not always going to happen. So all these markets, we are supposed to be trading it and be enjoying pips and be enjoying pips over and over again. Can you see? Look at this particular trend. Look at this particular trend. Peak formation low. Where did market reject at first? I50. Market came back I50. The market was peak here. Can you see? I50 is always in your word on your cycle. So these are the kind of trade you should be actually looking forward to trade. See, there are a lot of market and I50 will always happen in a lot of market. All you need to do is to be patient enough for it. I don't know if you get my point. Now, let me go to M15 and tell you how you can possibly be way more than 20 pips from that market. But ideally, you should be looking at 20 pips. But there's a way you can actually do it to pick way more than 20 pips. So let us go and look for one ID50 trade. I've seen one right here. Now, let me use this one as an example. This is an ID50 trade here. And I would like to zoom out. And I'll be using EMA crossover to explain something right here for you. Now, market came here, did an ID50 here on H1, dropped a little. Now, you could have actually entered this market in the morning, right? And when markets pull down, if you are this 20 pips person, let's see if you are going to be able to pick 20 pips out of this market. Yeah, more than 20 pips, that's 30 pips. Now, look at what happened. When market came down, when market was coming down, this is where your 5 crosses 13 EMA is very important. When market gave you your 5 crosses 13 EMA just at your entry point here. Now, when 5 crosses 13 EMA, can you see what happened between 5 and 13 EMA? They kept fanning out. They didn't cross each other. It is until when 5 crosses 13 EMA to the opposite direction before you close your trade, which was around here, right? So let us see how many pips you would have picked right here. You would have picked 20 pips. Yeah, 20 pips for market to cross back. Now, market came back up to give you your third leg. They stop wanted people back to give you your third leg around this point, to reject around this point again. Then your entry point right here was here. It closed below 30. Can you see market went up and came back? Your 513 went up and it crosses back, which confirmed your entry point here. 513. I'm trying to give you like one big cheat right here, one very, very big cheat. And when market did that, what happened? 513 never crosses again until when? See, now this is the point you can pick more than 20 pips when your 5 do not cross 13. It is until your 5 crosses 13 before you close that trade again. See, 5 do not cross 13 until probably the next one. Let's go and check it out. When 5 crosses 13, yeah, until probably the next morning. So you could have look at where your 5 crossed 13 again up at this particular point. So this is where you are going to close your trade. Or look at something you could have picked, you would have actually picked like how many pips out? 101 pips. See, your 5 never crossed 13. It is until after the crossover here, which confirm yourself, it is until your 5 crosses 13. Can you see? They didn't cross each other, 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 they didn't cross each other. They were close by here, they didn't cross until what crossed 5 crosses 13 to the opposite direction again. I've given you like one of the biggest cheats right now. Now, that is that about H1 ID50 trade. Now, your job is to go back and mark a whole lot of H1 ID50, H1 bounce of H1 50 trade, bounce of ID50 on H1 trade. Mark it like I marked it on my chart. You can use your phone, you can use your system, anyone you use. It's the same method I use. I use the marking my phone, you use the marking your system, the same concept. Then you go back to your M15 and check the characteristics of your M's and W for entry there and where it actually happened and how it happened. It is very important you do it for over 20 different ID50s. All right. Now, again, what are the conditions for ID50? Number one, consider your directional bias on H4. After you've considered that, on H1, look for a possible peak. There must be a possible peak to show that, okay, this is the direction of my what, of my cycle on H1. Now, if you can easily confirm that peak and the level you are in, all you need to do is to do what? Wait for the market to what? To bounce off what? 50 EMA on H1. When it is touching 50 EMA on H1, go to 200 EMA on M15, you should be seeing your W or your M setup, right? So it is actually as easy as that. I think I've given you like one of the best tips ever, right? Especially that 5 AMA courses 13. You can actually pick as much as possible what pips in the market also. So thank you very much. Okay, let me do one more thing before we call it a day right here. Before we call it, is it a day or a video? I will call it. Okay, let's call it a day. How do you trade ID50? I've confirmed that, okay, this is my peak formation. Market start dropping. All I will be waiting for is what my market to pull back. Don't mind my drawing. Let me just do it like that. Market kept dropping. Then at a particular point, I know that this market that is dropping must stop dropping and start consolidating or pull back. Now market stop dropping, then start consolidating. So at this particular point, I will be waiting for it to pull back to where 50 EMA. Once it's touching my 50 EMA, my next job is to go and check my 200 EMA on what? On M15. Then I will be seeing something like M. When market touches that, it drop again, it start rejecting, it drop again. At a particular point again, I know the market will come back there. So I will always wait for my 50 EMA. Always. It's one of the sweetest possible trades you can never pick. All right, thank you. Thank you. I remain my humble self, Dipo Adepoju. So we meet in the next video.